Report it into nothingness.
That's how you know you're actually legit. You just pretend like you're streaming, but there's no
Yeah,
recording
anyone else is
whatsoever.
trendy, but we're punk. Because we're going to stream into nothingness.
That's just what we tell ourselves to feel better. All right, and we are live. So today we're going to be taking a look at the fall of the crypto giant FTX and the founder Sam Bankman-fried. So I think a fair bit of people would probably know what happened, or at least have an idea that a huge crypto exchange blew up and lost billions of dollars. So we wanted to cover the basic story, like how they got there, what caused the collapse, what were the root causes of it all, and then the implications of it. So we'll just kick it off with the basic recap of how they got there. Nothing too fancy. So it starts off with Sam Bankman-Fried. He was a newcomer to crypto, like he was kind of late to the game, but he had some experience at Jane Street Trading, and so he kind of understood trading from a more basic level. Like he wasn't completely new to the whole scene. And what he noticed was an arbitrage opportunity with crypto. He spotted that in certain places, the price of Bitcoin, and particularly Bitcoin, I think there might have been some other ones as well that he also used, but it was lower in certain areas than others. Most notably, like in North America, Bitcoin was cheaper than in Korea, and most notably is Japan. And so he set up a company called Alameda Research to make money on that arbitrage situation. And he did that around 2018, I believe. And he started making quite a bit of money off of that. And then he wanted to build an exchange as well, as he had noticed for crypto, certain things, like certain segments of the crypto market were not being served. And so in 2019, they set up FTX. It started pretty small, but it wound up growing very rapidly, particularly because of COVID, when obviously the pandemic hit and everybody was forced into their homes. All things digital were extremely popular, and there was trillions of dollars being printed, and so everybody had access to tons of cash, like big investors, little investors, and so crypto blew up, and they started making tons of money, and they were trucking along at both Alameda and FTX. There's also tons of other companies under that FTX umbrella, but up until November of this year, they were doing really, really well, on paper at least, or at least paper available to the general public. Things were going great. And then, was it November 7th, I believe? The whole thing just blew apart, and the whole company shattered, and they filed for bankruptcy. And now all sorts of information is coming out. So, who wants to take over to talk a little bit about the falling apart of FTX in early November?
Well, I guess I can just jump in on that, because it all started off with basically another exchange. I guess he's the CEO, I think. CZ.
Yeah, Binance.
Yeah, Binance is on news from CoinDesk or something.
CoinDesk being another major crypto exchange.
Not not as big as Binance or FTX though. It's like
no, but it's still pretty big.
I don't know. They stated that they released information stating basically that Alameda Research had a significant amount of their assets in FTT token, which was FTX's issued token, which I guess we'll probably get into a bit more later on. But anyway, that was bad news essentially for FTX and Alameda Research. And in response to that news coming out, Binance's CEO, CZ, publicly announced that he was going to be selling all remaining FTT tokens that his company had, which was a significant amount. And
I think it was
500 million.
500 million.
Yeah.
Like, I don't know if he got that all out of it because that's a ton to sell, but that's how much he was holding when he said he would sell.
Yeah.
yeah, and obviously announcing that prior to selling tanked the price, which created a cascade where now people knew that a lot of the how would you say, like a lot of the assets in the company were in this FTT token, and that the FTT token just got destroyed in value. Therefore, the assets of Alameda Research and presumably FTX went down drastically, which created a panic, which then led customers to try to withdraw all their holdings in FTX in case there was a liquidity problem, which just like piled on top of the issue, and self-fulfilling prophecy essentially, which created a liquidity problem because everyone was trying to pull out their money.
Mm-hmm.
And the initial reports from SBF himself and FTX were that it was just a liquidity problem. That basically they had enough. So I don't know how deep we want to explain it, but they were claiming that there was plenty enough actual hard cryptocurrency to cover all customer exchanges, but it might take a while for them to actually be able to get it all together and provide it back to the customers. So basically, they didn't have enough liquidity to allow customers to withdraw, but eventually they would be able to ensure that all customers got their deposits back after going through a process of liquidating their various assets if necessary. And to be fair, like this wouldn't be unusual, I guess, for a lot of financial firms to have a liquidity run basically like this, where they have, the easiest example you could come up with would be like a small bank. So if you have a small bank and a bunch of customers deposit their money, and then the bank lends out that deposits in the form of mortgages and other sorts of lending, if all the customers at once came into the bank and said, we want our money back, the bank could not return the money. That would be they would not have the liquidity because the money would be the bulk of the money would be loaned out in mortgages. And eventually, if they were able to sell off the mortgages to a third party and all these other, basically close out their lending, they would be able to give all the customers back their money.
Yeah. It just takes a bit of time. Yeah, it takes a bit of time.
And anyway, so that was the initial story, that it was just a liquidity problem. And
that there was a theory running around in the crypto circles when this initially broke, and the people who believed that it was a liquidity problem. That is an interesting theory that might be true, depending on how much Binance knew about the problems at FTX, and that Binance might have been making a play to cause a liquidity problem in FTX to then either buy FTX outright or give FTX liquidity for a substantial stake in them, therefore sort of cementing themselves as the dominant crypto exchange.
Yeah, that
but
definitely
then
I saw.
That did not pan out as being a possibility because there's much more than this liquidity crisis.
CZ is known to be like really quite ruthless and intelligent, so I do think that theory does hold weight, and he has kind of had a rocky relationship with SBF. So, while it's not provable, I do think that there's some real merit there, because taking down your competitor in a manner like that is pretty par for the course for a relatively ruthless person.
Themselves in a vulnerable position. Really, what else is going to happen?
Why would you not do that if you can, and then take out your major competitor? Like, you might have to be a bit of a softie not to.
The main evidence in support of like that theory is just the fact that CZ tweeted that he was going to sell before he sold.
Yeah, exactly.
Because if you're planning on liquidating a big chunk of anything, you don't want to advertise that because then people will know that a big block of something is going to be on sale and that'll drive the price down, and you'll just get less out of the sale than if you would have just kept your mouth shut and sold it off,
Yeah.
in lots over time. You
Yeah,
just get way more
exactly.
out of it. So that whole scenario makes a lot of sense. In like, he wanted to announce it publicly, and he didn't mind eating the loss of not getting as much out of his tokens if it meant crashing and burning FTX,
Yeah,
and
and
then
being able to
getting to
take it.
turn around and it, basically, yeah, that's the next part of the story, is that Binance offered to buy FTX conditionally, which would create the liquidity necessary to alleviate the situation, and then Binance would scoop up basically all of FTX's operations and assets at a massively discounted amount, right? Because they're what other choices FTX have, and that has, again, that has some precedent in the past. Like, I think, what is it, 1907, the J.P. Morgan,
Yeah, Morgan did it.
basically backstopped the Canadian, or the entire American financial system by lending out his large personal fortune to create liquidity. And it also, like, another obvious one was Warren Buffett in 2008 bought a bunch of, I think, Goldman Sachs, and made off like a bandit. And that's generally what happens in those situations, is the person doing the bailout, like bailing out, gets a great deal and makes a lot of money, and the company getting bailed out gets shafted because they have no leverage. They have no.
They stay alive,
choice,
but they
basically.
get fucked pretty hard.
And that's exactly what happened to Goldman Sachs in 2008. Is Buffett made a small fortune, and it was expensive mistake for Goldman Sachs, and it makes sense from like a regulatory perspective, in the sense that you want to discourage companies from getting themselves into that situation, because it does create a bunch of cascading problems. So having the bailed out company get punished is just good from a regulatory standpoint. But anyway, Binance did due diligence, not very long. It didn't take them very long. I think it was like a day, basically.
Yeah, 1 to 2.
That they turned around and said, we're not going to be buying FTX because it has much further and deeper problems than we thought, and we're not going to acquire it. And then that's basically was the end of the line. And I guess for some other context, it seems like this is only coming from one source, Kevin O'Leary, which, I don't know. Canadians might actually know Kevin O'Leary more than Americans, because he is Canadian, and he was on Canadian Shark Tank.
Yeah.
Or I guess what was the Canadian was
Den.
Dragon's Den.
I think it's
it was
actually
OG.
the original. I think it
came
out before Shark Tank. Just
smaller. Anyway, Kevin O'Leary said that he talked to SBF and was going to try to get some sort of sovereign wealth fund or some other big institutional investor to bail out FTX, because SBF was saying that it's just $8 billion. Just $8 billion and everything will be solved. And but apparently everyone, like all of the investors and wealth funds and all this stuff, backed out when they heard that there was going to be regulatory scrutiny over the whole situation from American regulatory scrutiny from the SEC. So that killed any possibility of anyone else coming in and saving the day. So after that, that's when it was like truly that's when FTX was like truly dead in the water, was when there was just like no hope of them getting a bailout because there was too much scrutiny on the company.
Well, that $8 billion that they need for the bailout, how I saw that broken down was that their liquid assets were $1 billion and their $9 billion of liabilities, and that the rest that Bankman-fried claimed to have that was less liquid was $3.5 billion in equity they claimed to have, and then $5 billion in either tokens that FTX minted, so basically FTT, which is now worthless, or shitcoins, which anybody who knows crypto knows that you can't sell many shit coins without tanking those markets because there's not very much demand to buy them. So they basically had $1 billion that they could actually work with when they needed $9 billion in liabilities.
Yeah, so that's basically the story of how they imploded and ended up bankrupt, is because they had no other option. They were insolvent at that point. Their liabilities far outweighed their assets, and there was no investor willing to touch them and take on the situation. And I guess then the next, point we should go through is just like how they got to that situation where there was billions of dollars unaccounted for and unnecessary to keep the company going that they never got.
Yeah. So I can handle the first chunk of that. As we mentioned earlier in the podcast, Sam Bankman-Fried created Alameda Research, which was the trading firm that still operated and is a related party to FTX. However, the relationship between the two companies was a lot closer than what is normally permitted within the finance space. Normally, you have to have quite a large gulf in terms of controls and what you're allowed to share between the companies and all of that. Unfortunately for FTX and Alameda, Alameda had been making a lot of risky plays, and actually there's another point. When crypto crashed earlier in 2022, Sam Bankman-Fried and Alameda Research, they tried bailing out quite a few different companies in the crypto space to try to stabilize the entire ecosystem. That was a ton of money, and that plus the money that they had burned on that, and plus Alameda's extremely risky investment patterns, wound up losing the Alameda itself a lot of money. And
there's a debate on that though, because Voyager Digital, being a broker that they bailed out with $485 million, may have had they may have been backing loans to Alameda that if they had went bankrupt, they would have exposed Alameda's insolvency much earlier, such that it might not have been an attempt to sort of stabilize the crypto space, but just sort of a survival attempt to bail out at least some of these other crypto companies that they spent hundreds of millions of dollars bailing out, try and patch the sinking ship.
That's interesting. Yeah. Well, regardless of that, basically the related party of Alameda Research had gotten themselves into a very tough spot financially because so much of their actual assets were FTT tokens. They didn't really have real funds to cover all of their losses. And so Sam Bankman-Fried, through a backdoor accounting network, started moving funds over to Alameda Research, customer deposits from FTX into Alameda Research to backstop their losses. And it turns out that how many billion was it? I don't recall right off the top of my head, but I think it was 8 that they sent
Alameda?
over.
Alameda had $8 billion in loans and assets consisting of FTT tokens.
Yeah, but how much had they sent of customer deposits over to Alameda?
I don't think that number is entirely known. I think that's
but it was.
It's but the FTT was being given to, FTX was making the FTT to back their own loans they were giving to Alameda, generally speaking.
Yeah.
It was a really obvious sort of Ponzi scheme, and Bankman-Fried described this in public, where people think that this might have been exactly what he did with FTT, where he described in public about how, due to trading volumes on tokens, you could get a lot of value out of a large supply of tokens as long as you made sure that only a small amount of that large supply was moving. So in the case of FTT, if they had 80% of the supply between FTX and Alameda, then only 20% of the supply was liquid or something along those lines, then it seemed much more valuable than it was. And then they could justify that it was a good collateral because of the value of FTT token, but it was just pushed up by the fact that they were making sure most FTT token could never be traded, so that 80% of the supply that never moved, it should have been 1/5 of the value that it was, because that shouldn't have been set up in that fashion. Like, it was a really just, it seems straightforwardly corrupt system that they were probably using in order to backstop these loans between Alameda and FTX.
Yeah. And then once the FTT value collapsed, like they had nothing, right? So all of their loans, they have no collateral. So then they're completely dead in the water.
Yeah.
Yeah. But the point that I was driving home there is because of that related party and because of the absolute stupid way that Alameda was using their money, they wound up burning a huge portion of of actual value, like stuff like Bitcoin and whatnot. So they basically had no cash, and it turns out that it's
the number on how much value they burned depends on how much debt was incestuous. But at least they burned $4 billion of real value, and at most they burned $12 billion.
That's a ridiculous amount. Like high number or low number, that's pretty insane.
Yeah.
But one of the biggest problems there was the fact that they were siphoning customer deposits from FTX, which in the terms of service of FTX, they stated directly that they would never loan out your like anything you deposited on the exchange was never to be loaned out. And then they had a back door where they could, in their accounting system, where they can move the funds from FTX over to Alameda to backstop their screw ups.
Mm-hmm.
And so that obviously creates a huge, not only ethical, but business problem as well. Because then when you actually have that run on the exchange, they didn't have the funds. Like, that's one of the major reasons why the whole thing collapses, because they just had taken away. Like, if they had all of the funds sitting still within FTX and Alameda still tanked, yes, there probably would have been problems, but it wouldn't have completely crippled FTX. Like, they wouldn't have had a liquidity problem because they would have had all of the customer deposits available. Like, it might have still broken the company just because of like the obvious ethical problems and then scrutiny from regulators, but you would have been able to handle they wouldn't have had to file for bankruptcy.
Well, that's not necessarily true. I don't think. I think because there was multiple issues there, right? And one being the FTT token being used as collateral, which is obviously you can't use something that's linked to because the whole premise of FTT token was that FTX promised to buy the token back from holders with their profits. So if you had FTT tokens, FTX was saying basically, in the future we'll buy this at a certain set price when we make money. And that's why FTT had like any sort of inherent value, was because you were basically holding a promise that the company was going to, buy it back in cold hard cash with their future profits. But the problem is, when you use that as collateral, if anything goes wrong, obviously this token, which is like premised on future profitability, is going to collapse, because there's not going to be future profitability if your company is in difficulty, and therefore it's just like it's a completely useless collateral for loans for that particular reason. It's like the problem with it is obvious. So even if they had kept their customer funds completely untouched,
the
FTT token problem could have created its own bankruptcy, basically, because they had a ton of these loans in, say, Alameda Research that were backed by nothing but magic tokens that would collapse if Alameda Research collapsed or if FTT
Yeah,
collapsed.
that's true.
So, to be fair, the customers would be made whole probably and be able to take their funds out, and the company itself would go bankrupt, but at least the customers would be sitting with funds, right? Which would be much better because
Do you say FTX.US, which was their American branch, which was subject to American crypto regulation, while it hasn't perfectly reconstituted its customers, has been way better than FTX Global. Like almost all of these problems were specifically FTX Global trading with Alameda Research because they explicitly didn't operate in the United States to avoid any sort of reasonable or even minor regulation on
Yeah.
what they could do.
yeah, and so I think that's a good illustration of the problem, right? Like, but at least their customers aren't as badly screwed because the issue with uh, full sending the customer deposits is not nearly as bad with the U.S. side of things. So yeah, I was just clarifying there. Like you could definitely see a bankruptcy for
Yeah,
FTX
but for a different
even without the
reason.
customer. And just the other thing to add on to the whole like using customer funds segment is like that's the one where it's like, as far as I can tell, like the most clearly illegal. Like, and again, the whole crypto space is like very murky, and there's like very little oversight because they're operating in the Bahamas, all this stuff. But I think if you do have SBF going to jail for something and getting criminally prosecuted, I think the big part of that case will be the customer funds being used because that's like the big fraud essentially. Like the other issues, a lot of the other issues like the FTT token as collateral and all that stuff, they're like just terrible accounting practices and terrible management decisions and like very sketchy, but they're like not as clearly just outright illegal and fraudulent.
He was arrested in the Bahamas, was he not? Like that's when you know you've messed up.
I think he
he's,
was detained,
yeah, I
and but
don't think he's been
I
imprisoned.
don't think he's like been charged with anything. I think he was
Okay.
detained in order. Again, this is fluid, so maybe things have changed. But as far as I understood it, he was detained by Bahama authorities in order to. I think they basically forced him to transfer something like $400 million out of the FTX accounts in like crypto accounts into a Bahamas controlled ledger, like bankruptcy holding account. So they just
Yeah, so it was like a what do you call it? More of a bureaucratic measure. But it would either way, when you're getting cracked down on in the Bahamas, it's a very bad sign.
yeah, it's not a good look.
It's like, oh
But
yeah, you know, a place with the super loose practices that everyone goes to for that reason. Yeah, they wouldn't take what he was doing.
Well, they're probably going to
yeah,
want to make sure that they can recruit because I'm sure he's got tons of stuff with them as well, right? And they're going to want to make sure that they can get their funds back.
it seems like the bankruptcy, the Bahamian. I don't know, how do you translate that into a
It has to be Bahamian. I don't know.
Bahamian verb or adjective. It seems like they've acquiesced to the request in the U.S. to just run it through one court. So I think it's all been consolidated, like because there was a American-based bankruptcy and a Bahamian-based bankruptcy, and it's all been consolidated in one court in I think Delaware.
Mm,
I
makes
think it might have
sense.
actually got venue moved to New York, but it's just going to be running as one, which is much better because there won't be like two judges making two parallel rulings with potentially conflicting bankruptcy rulings. But yeah,
There's such an issue with distributing the few remaining funds. Surely.
yeah, it could have created like some real issues with basically jurisdictional fighting and
Yeah.
yeah, but it's the Bahamian government or whatever acquiesced and said, okay, let's just do it under one. So I think that kind of like covers the collapse and like the mechanics of it happening. But I think like the thing that we didn't get fully into is just like the FTX, like the culture and the like company setup and like how like why so many of these things happened when this it's not like this happens every other week in corporate America. Like this is truly like a unique situation, and that's because like FTX was run in a pretty unique way. And like just for I think like the one like the one main like data point or whatever you want to say of like how crazy the FTX situation was is just like the employees there. Like all of them were essentially like 20 in their 20s or at the most early 30s, with very little like experience in their respective fields, and like hardly any work history or work experience that would justify the positions they had. Like, I mean, SBF himself, he's the CEO of a $32 billion company, and he had worked one previous job at that previously mentioned trading firm.
Yeah, Jane Street.
The head of, I think it was like risk management, she had 1 year at Credit Suisse, like 1 year out of university at Credit Suisse,
Oh no,
which
Credit
is,
Suisse is the bank, right?
yeah,
Yeah.
yeah. So
Oh yeah.
she
Okay.
had 1 year of work history before becoming a top executive at, again, this was supposed to be a multi-billion dollar company. And like, I guess the general uh, trend was just it was a crew of buddies that knew SBF, and they lived together in a very odd living situation and just ran the company as like a complete rookie crew. Be like a bunch of college buddies running a startup, which is essentially was, but it had
Yeah.
grown to a
One of the
huge.
extra weird twists to that like crew aspect is that the majority of them were members of the effective altruism community, and that by critics has been described almost like a cult. And so, on the face of it, they would all be behind the idea that they were running this billion-dollar company to then give back as much money as they possibly could to be effectively altruistic. But there's that sort of cult dimension to it as well, where they had an ethical or moral tightness that you normally wouldn't see in a business.
Well, and that I think that's actually a good point. And like the further to the cult mentality, like the apparently the inner circle, there was 10 of them. They lived in a $30 million penthouse together, 10 roommates, including SBF and his on again, off again girlfriend, who was in charge of running Alameda. That's like Caroline Ellison, and
Couple little
that
good highlights on Caroline Ellison Ellison to get a feel for this girl. She didn't have a job in 2017, didn't know what to do, and so because she had been dating Sam said, "Well, why don't you just go work for Alameda Research, my company?" And then she didn't really have any trading experience, and then became the CEO within like a year or so. And she's also said some pretty amazing things. So admitted on Twitter that she regularly uses amphetamines, and it makes dumb regular human experience much better. Is a strong believer in polyamory, but only the type of polyamory where you have vicious infighting to establish a ranking system of the various partners. And she also, one of the reasons this started to blow up was she admitted on a call that FTX had sent customer funds to AR to prop them up, and that was picked up by the Wall Street Journal a while back. And I think that's one of the where this stuff started to come to light. So, yeah, just a stellar group of people here.
Well, and like again, going back to the cult thing, they were that 10 group of roommates. The group of 10 was in a polycule, which is essentially like a overlapping, like a group with overlapping sexual relationships, essentially. So they are like, it was like one big, essentially
Degenerate coven.
polyamorous, or
Coven.
yeah, coven of like of weirdos having sex with each other in an apartment that ran the company. Like, just very bizarre. And obviously, I don't think that's the type of situation you want for your like insider circle where they're living together, they have sexual relationships, and they're all like massive conflict of interest and stuff like that. And there's just like no possibility that they're ever going to be objective and professional about anything that comes up, right? Like there's just way too many uh, personal commitments to be separated from,
And
and
you can really see why they would resist any sort of attempt by a big investor to put anybody on that board. You know, they don't have room for 11. Sorry.
Yeah, some stuffy guy on the board. This stuffy 65-year-old. You don't want to be sleeping with him.
I'd just like to like hammer home like the kind of like startup, like small time company culture that was there. Like SBF himself used messaging services that auto delete your messages, like Snapchat or whatever. Or I don't know if it was specifically Snapchat, but
Did on Signal too, or anything like that.
yeah, and he actively encouraged all his employees and executives to also use messaging services like that. Basically, obviously, to avoid a paper trail, like clearly, like why else? And they didn't have an accounting department. They apparently just decided to contract that whole function out as a financial firm. They're just like, oh, let someone else deal with it. There basically wasn't any internal controls or like, as Khan was mentioning earlier, like any like separation. Like when you're running an exchange on one hand and a trading firm that would trade against the customers of the exchange, which I get that's another problem that we didn't touch on, but um, you want those siloed very strictly because there's conflict of interest and legal problems there, and they didn't have any of that. They didn't have any siloing, proper siloing. There was tons of back and forth responsibilities and roles and between the two. And again, like I don't think a lot of this would be like that crazy for a tech company, like a small tech company. The one like unusual thing is like uh, FTX was getting like big rounds of funding ever since like 2018, 2019, since like the first crypto boom. And they never like grew up basically. Like there was no none of the investors put a member on the board. Like Price was saying, there was a 3-member board. It was SBF, some Antiguan lawyer that I don't know like why he was on the board, but he was,
That's
and
just
a
legal
former
counsel
executive.
that you'd just to advise on that.
Well, he was like his expertise was in online uh, gaming or gambling, like online gambling, as far as I remember.
Does anything apply to crypto better?
Well, Jesus, a little on the nose there. And then the other board member was a former FTX executive. That was the 3-member board, and basically SBF made all the decisions as like essentially dictator. And I think like the perfect storm of circumstance that happened to allow like such a like amateur company to keep operating like that, like in such a disorganized, unprofessional manner, was that they were raising funding like at like the peak of the like venture capital mania in like 2020, 2021, when there was more venture capital than venture capital knew what to do with. And they you can go and like look it up on various sources, but like the number of venture capital deals and the amount of money in venture capital in the last couple of years has like went up like
I've got
exponentially.
the number for 2020 and 2021. 2020 was about 310 billion. 2021 was 630 billion. So it doubled in 1 year. And over those 2 years, that's $1 trillion in venture capital.
Exactly.
And it's
And so
all flooding into predominantly like because of COVID into the digital space, right?
Well, and because it's venture capital and digital seems to offer that magical potential for return on investment.
Yeah,
Right.
that's
Like you
true.
can invest in a person who's making tractors with your, well, maybe someone will, but not to the same extent. It doesn't have the same potential
It doesn't have the
success.
margins, yeah. Like if a tech company blows up, it blows up huge a lot of the time where, you go from a small startup and then within, 5-10 years, it's now a multi-billion-dollar company.
It's still a small startup, but it's now a multi-billion-dollar company.
Yeah.
It's like they still might run their place out of an apartment with 10 people.
well, and it's like the the big thing there is like when with more venture capital chasing the same number of entrepreneurs, like obviously and like more deals being done, the quality of deal deteriorated in those years.
Mm-hmm.
And so they were just like looking for any halfway like viable opportunity to throw millions or tens or hundreds of millions of dollars at. And I think we'll probably dig into this a bit more later, but like that led to like very lax standards and marginal due diligence. Like one of the firms that I think it was one of the firms that was investing in FTX was doing on average one deal a day, one venture capital deal a day, which is just
Wild.
like insane. Like you can't do due diligence when you're turning around deals like that at that pace. It's just not possible.
Yeah, I've
And there are
done.
some of those companies that specifically say they've got a list of other companies that they trust to do due diligence, so they'll follow them blindly because they assume they've done due diligence. But one of those companies that other companies assume will do good due diligence is Sequoia Capital, and they were invested in FTX.
Oh, just a little tidbit on that. When Sequoia Capital took that meeting to invest in Sam Bankman-Fried and FTX, Sam was playing League of Legends during the meeting, and the investors on the call ate it up, thought it was like the coolest thing ever, and one of them even typed in the chat box saying like, "I love this founder." So you can see like it seems like venture capital lost its mind over the pandemic. In a normal place, in normal time, there's no chance that would have gone over well. Like they would have been a lot more, I think, far more scrutinous of such like such a lack of attention and lack of self-awareness and professionality. Like I've worked on some due diligence before, and it's normally a very stuffy affair because hundreds of millions of dollars are at stake. I think it kind of reflects like the mania at the time.
Yeah, so I think what I was focusing on there was just like there wasn't the due diligence on these investments, and part of the due diligence and part of like the typical venture capital cycle is as part of the investment they will often demand board representation, and they will demand basically they will bring in the professionalism and the oversight and the auditing and the reporting kind of infrastructure along with the venture capital to get things cleaned up, because a lot of these tech companies look exact, or maybe not quite as bad as FTX, but similar to FTX in terms of just like a crew of essentially teenagers doing dumb shit, but
Even though they're well
still
into their 20s.
well, you're still creating a viable product, right? And it's like, okay, well, now the adults are in the room. Let's bring in some real professionals and some real, grinders that'll do the hard work, because, the founder types in the early tech startup glomerons aren't really interested in the paperwork and the nitty gritty. They just want to do the fun thing, which is, grow the company and
build the product.
Classic kind of Mark Zuckerberg attitude, right? But again, like I guess the kind of the unique thing about the FTX situation, it seems from that standpoint, is Sam was like super adamant that none of that stuff could be part of the funding requirements. Like he was like, basically he had a pitch package that basically was like, give us money and you will get no representation, you'll get no oversight, and if you don't like it, then we don't give a shit. We're not interested in your money. So I think that was like peculiar to the FTX situation, where the founder was like very, very set on keeping like this like casual and chaotic environment going. And like I'm veering into a bit of speculation, but my guess is like the reason that he was pretty hardline on that is because they were already engaging in the sketchy activities that eventually blew up the company. Even back in, I'm assuming it goes, it'll come out that it goes back as far as like 2018, 2019 when they were first starting.
Yeah, I do have a little bit of evidence on that. Like there was Alameda Research kicked up some red flags in 2019 in one of their promotions to get investors to buy into the firm. They offered 15% APR loans with no downside, which, if you know anything about rates, that is a fantastic return that is not doable. Like for no downside, that supposedly completely secure, that you will always get your 15% and your down, like your principal back as well. It's just not heard of. And so there certainly is evidence from back in 2019 that they were already starting down this road, or had already like kicked it off. Like the whole thing started with this. It's just, that's the Bernie Madoff situation right there, where you're getting these fantastic returns with no downside. It's too good to be true, and when that's the case, it is. So I have to agree. I think it's going to come out that they've been doing the shady shit since day one.
I think it's very likely. Like it'd be shocking if it wasn't the case that they started off with like some small covering the losses on Alameda Research, and then that just grew, rather than, oh, Alameda Research did really bad, here's $8 billion or whatever it was. Like you don't go from nothing to $8 billion in one problem. Seems unlikely.
And the other fact is that they had that backdoor accounting system set up to start moving stuff like that.
It's like they probably never thought it would get as bad as it did.
Yeah,
but that's exactly the problem with these sort of operations. It's like it's always going to get worse.
Yeah, and so to me, it definitely strikes me as they were plotting this type of behavior all along. And FTX had an interview with Vox, a Vox reporter. They chatted over Twitter DMs, and he in those DMs pretty much admits that a lot of like his talk on ethics and regulation and all of these things that got him a good reputation in the start was all, and spouting off woke platitudes, is all horseshit. It was all designed to build him up as like a good guy, and he didn't really buy it. He was just saying it to get himself a nice sterling reputation in the press. And so, like, again, it kind of shows where his head's at.
It's interesting because I did read that in his early career choice on going into Jane Street as a trader was influenced by, I can't remember his name right now, but the founder of ethical altruism, or the person who codified it. Basically, he was looking for,
Yeah,
William
McCaskill.
McCaskill.
Yeah. So Friedman was looking for a way to, be contributing in an ethical way to the world, and he was recommended to go into trading. That's one of the stories about it. So there seems like, at least to some extent, he wasn't always some horribly manipulative person, but maybe he's just always been that way, and just, he was actually looking for a way to make tons of money and knew that the ethical altruists were also knew how to make tons of money.
Yeah, I think that would be much harder to objectively prove, but yeah.
But it seems like there's a roots there where, like, he doesn't seem like he glommed onto ethical altruism just for no reason. Like, it seems like he found that
his
in
mother
his youth
was
and
into it.
Into it. Yeah.
His mother was
But
a big proponent of it, which is
I do,
interesting.
I do think that's like probably the likely. I don't know if it's worth speculating too much, but I do think it's the likely scenario is, it's a great justification for basically be a greedy asshole. If you're like, oh well, I'm only being like super self-interested and greedy so that I make enough money that I'll give it all away eventually, right? It's like,
And then you just never do.
I think it's like a great, like, unfortunately because I think the effective altruism ethic is like quite reasonable.
Yeah, I actually think it's pretty good.
But I think it has like, it's like one of those, I don't know,
It's
like,
exploitable.
yeah, communities or whatever where, and value systems where like just shitty people will end up glomming onto it because it's like, it's easy to kind of hijack with, and the person doesn't even have to be like cynical about it, right? Like they could be like genuine about it in the beginning. It's just like very easy to rationalize around, especially for like
I only need another
most
billion
smart
and then I'll
person.
give it away. Oh, no, I need one more billion and then I can start giving it away. Though, to be fair, SBF did give away a ton of money to charities, so it's not like he was giving away nothing. Like, he did donate a lot. A lot of his donations
Sounds
turned out
about-
to be political, but
150 million roughly to charities and 130 million to Democrats, and then a smaller number that they didn't disclose to Republicans.
Which is, he spent $300 million on personal property for himself and his family.
yeah.
Easy
so-
justification.
which is
$1
really
spent
interesting
to
because
charity.
his mom is also, a big Democrat and effective altruism supporter, and turns out not so altruistic, are you?
Well, you can just do better charity work if you have $120 million mansion to do it from.
In
just-
the Bahamas.
It'll pay for itself in like a year max in terms of the quality of work output once you're like just chilled out by the Bahama.
Of course, it's all
environment.
coming together.
It just relieves the stress. You can focus better, and then you can easily double the value of that investment with your just chilled out vibes and getting work done. It's just, you guys just don't see the long term. You don't see the long game. You're
And
not
long
quite
game
as
by
smart.
2 years. That's all it takes to double it.
exactly.
We're only
Just
thinking in
what you can do
days.
is 10. And then when you die, you donate the $120 million property to charity, and it's all good. And it's, property only goes up, right? So it'll actually be worth more in the future. A bigger donation in the future.
It's all coming together.
I think the next couple of things that are worth going through is just like because we already mentioned it, is like his parents. Just it kind of all fits together. Is like SBF had like some pretty impressive connections, starting with his parents, which then translated into some pretty impressive like endorsements and celebrity deals and that kind of thing, and which then further also like worked in with like the big name investors and then the big name clients. So I think that all is worth covering because it just seems like crypto is like a pretty, even now, like I guess in the last year or two when it was like going really hot, it got some mainstream legitimacy to a certain degree, but it was always poo-pooed a lot by like, the establishment and the mainstream media, just like scam. It's, it's a horrible for the environment, all the typical FUD. But FTX seemed to be a bit different, and you had like big name celebrities like swearing by it essentially, like Tom Brady, I think is like probably the biggest name.
Yeah,
Although
it's got to be. I remember that pretty distinctly last year when he was endorsing FTX.
Yeah,
he
but
was a
he
big
also had Shaq
endorser and
Steph
investor.
Curry, which are
Yeah,
pretty huge
they're
too.
all big names. And so you have like individual celebrities. Larry David, I don't know if people know Larry David, but he's pretty well known. And then you also have like organizations and sports teams like the Golden State Warriors, like that's the Steph Curry connection. That the team is sponsored or linked to FTX. Mercedes F1, Major League Baseball, like I think the league partnered with FTX. This is more obscure, but like esports, TSM, which is like the biggest name in esports, and League of Legends, the League of Legends pro scene, like their pro scene
SBF
also
needed
partnered.
to get coaching from them.
Yeah,
Drag himself out of bronze 3.
And also Monumental Sports, which is like I guess like a conglomerate that reps like Washington Capitals, which is a pro hockey team, and some other big name sports organizations. So it had like very, I guess, like legitimate and mainstream endorsements and celebrity advertisers, and that translated. I mean, that also went, I guess, hand in hand more or less with big name investors. Like we already mentioned, Sequoia Capital, which obviously very big investment firm, but BlackRock, SoftBank, Tiger Capital. The funny one for Canadians is the Ontario Teachers Pension invested.
Awesome. They've got way too much money, so they're a big player in the investment game.
I mean, they didn't put a ton in, but yeah, they still invested. So
not a ton into this one, but in general, they're a big game player when it comes to investment firms.
Yeah, they're a huge fund, right? Because it's a big employer. It's like a huge pension fund. But again, like that, those are like, blue chip funds that are like well known by anyone in like the finance world, and a lot of them had hundreds of millions of dollars in multiple rounds in FTX. And I guess the last piece of that puzzle is like, it also seemed to like, I think because of those like mainstream connections and those like big names attaching to it, it was seen as like the go-to for like big clients for using it as an exchange. So it's a bit harder to narrow it down on like who exactly was using it, but SBF himself mentioned that it was like like generally their clientele were large value clients that were doing like $100,000 plus per day in crypto volume, which is like the opposite of retail, right? Like it's not your average Joe who has a couple $100 in Bitcoin, and that wasn't their target market. And he even said like their revenue is generated based on volume, not on margin. Like I think they took a very tiny, he said like 2 basis point amount on transactions, and the only reason that they because I think their best year they did over $1 billion in revenue is what they were said. Again, the accounting might determine that was a lie. But so they had like decent revenue with tiny amounts that they were taking off, which the only way you can do that is huge volume. So they weren't relying on small time investors to come in, or average Joes to come in and put a few $100s. They had big name clients doing millions and millions of dollars of trades, which again, I think that's like linked to those big name clients trusting FTX based on like reputation and their backing from reputable investors, and their backing from like celebrities and other big name organizations.
Yeah.
Seems to have been quite a specialty of Friedman, was the ability in a one-on-one conversation with somebody to just make them fall in love with him. Like, I had not seen any sort of interview with anybody who met him who didn't say he was incredibly good at selling his vision.
Well, that's just like, to go back to one of the clients, Kevin O'Leary, which we talked about earlier. He had like millions and millions of dollars as a client there, and even I saw him talking post FTX collapse, and he said yes, like SBF was like the smartest, or one of the smartest people he's ever met and dealt with in the crypto space. And he said O'Leary said he would hire him as a trader if he didn't have access to move around funds between accounts. Still to this day, he said he would give him a job as a trader.
Man, short the shit out of O'Leary.
Well, I think that just speaks to what Price was saying about, like, I think he was clearly SPF's clearly very intelligent, and I think he does understand like the crypto market, like the mechanics of it very well. And I think he was able to basically use that like deep knowledge of the space, or I mean, to maybe only pretend to have the knowledge, but it seems like everyone that's talked to him, doesn't question his knowledge base or his expertise. They just, it's everything else.
The only time I saw him questioned was there's a leaked thing between him and Elon Musk. And it wasn't even directly him and Elon Musk. It was a middleman. And they said that SBF wanted to invest $3 billion in Twitter. And Musk just frankly did not believe he had the liquid to be serious about that.
But again, that's not a knowledge. That's not Musk doubting his.
Yeah, that's the only time I've ever seen anyone call him on something. It was just like, I don't think he has that much money, like liquid.
So I think that's kind of like how he did it.
Right.
Is he was just able to like out talk people, right? Like just sound really knowledgeable and expert in the field, and he probably was, because he was a knowledgeable expert in the field.
He did build Alameda and did make real money on trading through arbitrage. So it's not like, he was a complete charlatan in that sense. And I watched several interviews with him before the whole blow up, and he certainly has like an easy air about him. He can explain things quite nicely, and he's unassuming. He's like that nerdy guy who isn't, staring at his feet and all awkward. He's the nerdy guy who's explaining things very well and clearly, and I think it disarms a lot of people, right? And they like it. I can see why people would, during the interviews, like have no issue with him and actually like him quite a bit. The hindsight is 20/20 now, but from those actual interviews, if you're looking at it objectively, he is a easy person to listen to and seems like very genuine. But I can see that, being able to fundraise like crazy because of that. I also think like one of the points though, like in what got him all started is, like we mentioned, his parents, and his parents are extremely well connected within like the high ranks of government and whatnot. They're both professors of law at Stanford, and the first big investor into FTX was one of his dad's buddies, Orlando Bravo, and he introduced Sam to this guy, and the guy dumped like I think $100 million or something in to get him started. So I think quite a bit of the success is also due to the fact that the parents they're really well connected with the Democrats at the highest level. Like the mother has worked with Elizabeth Warren on things, so I think it helps that people know that he is very well connected and they want to be a part of that.
Well, I think the snowballed, right? Like
Yeah.
I think his parents were like well connected, got him set up with other connections, and then literally within like a year or two, he's got Tom Brady on TV saying buy FTX or invest in
Yeah.
FTX. It's like kind of like your classic rich get richer. It's about who you know kind of thing, where it's like all you really need. Well, it's such a huge factor of what you need is just like getting those initial introductions, and then you can just climb the ladder. And again, like that seems what happened here, where he had some initial legitimacy from his parents, and just being like a smart guy that went to MIT and could actually talk about things in a articulate and expert manner. And then he capitalized on that and translated that to bigger and bigger connections and more legitimate organizations and individuals. And then when one VC firm sees that, oh, Sequoia Capital's already invested, they must have done their due diligence. And that's like actually become a problem in VC land, apparently, is just venture capitalists kind of like lemming it by just farming out their due diligence to other venture capital firms. And if one venture capital firm invests, then everyone else does, because it's like, oh, they must have done their due diligence. We don't have to spend the money or the time to do ours.
That is very common with human beings in general, though.
Well, yeah, but it's like it's a big no-no in venture capital, but it seems to be getting to be a big problem, like we were talking about earlier, with like so much venture capital and just oversaturation in like 2020, 2021.
Yeah, you don't have the time to do it, so you're just like, okay, this guy
It
must
just
have already done
became-
it, just throw in 200 million.
That was one of the strategies, was like just giving up on your own due diligence and just like going off of the reputation of who's already invested previously to you, and just like, oh, if they've done it, then we can do it too. And if you have billions and billions of dollars of undeployed capital, yeah, it's tempting to just skip a few steps and call it a day. So it definitely seemed to happen for sure. And I think like going past that, like I think all those connections and like allowed like SPF to get really good media coverage. Like it's kind of funny. I think there's probably some people that have done collages and collections, but there's so many positive and like over the top positive articles and interviews and like stuff about SPF prior to the collapse on like mainstream news. It's just there's no one else in like the crypto space that got anywhere close to the attention and the like positive attention like at all. Like I just like for a comparison, I bet like Vitalik Buterin, who started Ethereum, I bet like has gotten like 1/10 or like 1/20th of the coverage that SBF got, and he's like way more integral to crypto than SBF. Like,
Yeah,
it's just not even close.
Ethereum. Yeah, it's like
Oh, a
he's
huge
one of
part of that. Oh, a huge part of the SBF magic seemed to be that they could play the effective altruism angle. Oh, here's a guy who's not a crypto bro. He's not buying a Lambo because they always pretended he wasn't. And he's just making money to give it away. Like, what a great guy, and he gets it, and he's the future of crypto.
Yeah, well, and like I said earlier, SBF in that chat with the Vox reporter basically admitted that. He said, like, I, played all that up, said all the woke things because that was going to get me my reputation. And he even says in that comment thread, basically, I feel bad for those who get fucked by it. This is his quote. He's like, the reporter says, "You were really good at talking about ethics for someone who kind of saw it all as a game with winners and losers." Yeah, This is FBS speaking. Yeah, I had to be. It's what reputations are made of to some extent. I feel bad for those who get fucked by it, by this dumb game we woke Westerners play where we say all the right shibboleth so everybody likes us. And like further throughout the conversation, it's pretty clear he's just saying like, yeah, I did all this for, saying all of these things just to build up the reputation, and so the media likes me, and the media ate it up, and they weren't looking to, like, they never really did any proper thinking on it. And it's very interesting to see what a House of Cards, all of that reputational, like what a House of Cards, like the reputation game is in the mainstream media.
Well, again, I think it's like everyone was doing the same thing that the VC firms were doing, which was skipping their own due diligence.
Yeah, well, like nobody did any sort of investigative reporting. Like people do that all the time for lots of billionaires. Like look at the heat Musk gets. Everybody's trying to dig up every tiny little thing.
Yeah, and that's what I'm saying is like people seem to look at, like SBF was on the right side of things, and he was getting positive press here, and he's getting.
You mean the left side, basically?
Yeah, true.
Correct, if you want to be simple.
Yeah.
And he was, getting endorsements and all this stuff, and then there was just like no need to dig any deeper. Like, why bother? It's like people have already done the work for you. You don't need to dig into this. It's just take it at face value. And he talks about effective altruism, all this stuff, and just keep puffing them up for that, and don't worry about it. And I think there's like a lot of that kind of thinking in like media, and just like in like that whole media sphere, where it's just like you don't need to do your own work, your own hard work. You just make sure you're on the same side as everyone else. And then if you get found out to be wrong later on, well, because you were on the same side as everyone else, then it doesn't matter, because then you guys can all cover for each other and just be like, oh well,
yeah, and that does seem to
let's move on, let's forget about it. Like,
and that seems to be what's going on here with SBF. Like, you don't see a lot of self-reflection within the mainstream media, or any, really.
Yeah, the mainstream media is, I think that's like one of the things that we can discuss in a little more detail. Is just like the mainstream media's coverage post collapse has been like, I don't know, like maybe not kind, but it's been fairly soft, like on SBF. Like, it's
benefit of the doubt on basically everything that I've seen.
And the benefit of the doubt, and just like kind of like, oh, this is like this guy kind of made some mistakes, and like it was an accident.
Yeah,
like
bumbled his way into it.
He kind of crashed the car by accident and like caused a lot of problems because he was like, it was an accident, right? It's like, can you imagine if like someone who was deemed to be like morally reprehensible billionaire or whatever had done the same thing, and use customer deposits to
like
offset.
Musk, for instance.
Well, yeah, like imagine if Musk had siphoned money out of, I don't know, one of his companies to pay for losses in another, and lost customer funds or some shit. I don't know how he'd do that because he doesn't have a bank. But in that example, like he would be like the second coming of Hitler, and screwing over just regular people with screwing them out of millions of dollars by being a charlatan and a fraudster and an evil man. And like there'd be calls for like, we need
immediate arrest.
We need new white crime laws to get people like this off the streets and in prison for the rest of their life, et cetera, et cetera. If it was anyone that was like on the wrong side of the moral compass in their minds, they would be getting just dragged through the fucking coals on this one. And instead, it's kind of like, oh, this guy, he made some mistakes, and he's got some some learning to do as a young man, and hopefully this is a good lesson for him, because it's tough to lose $8 billion of customer money. It's just not something you want to do when you're running a business. But everyone
I can't
makes
remember if he
mistakes.
was the youngest billionaire, but like the most over the top headline that was surely run as clickbait, but just goes to show you was the youngest billionaire, soon to be youngest trillionaire ? Question mark. And yeah, they've backpedaled a bit since then, I guess.
Yeah, so I think maybe we can just talk about the reason, but I think it is interesting to ask like why the media has been so nice to him. I basically have like I think there's like two competing theories. One is like he has been lining the pockets of the right people and he's connected to the right people, so therefore he's getting like the pass because he's just well connected. That's kind of like this, I would say, a little bit more conspiratorial kind of take on it. I think the other, like, I think that's possible, but I think the other possibility is just like all these people are embarrassed that they got taken for a ride.
Oh yeah, I would say that is definitely a part of it. Nobody wants to face the fact that they didn't ask a single question. They didn't do any sort of proper research. They just showered him with praise. Like I remember for the research, I was watching a CNBC article that came out about 2 months ago. And it was like the I can't remember her name. She's one of the finance business hosts. She's just fawning over him. Like how much of a smart, great guy he is. And now you have to say that, oh, this guy's an actual fucking scam artist, scammed, billions of dollars out of people, is likely an actual criminal. And we were just calling him, basically the second coming of, the crypto Jesus. Yeah.
Now they're just waiting on a second coming. They don't want to put him out too early, count him out too early.
Well, yeah, he'll restore everybody's $8 billion through other great transactions and business ideas, and then it'll all be okay. But yeah, to me, it does seem like you just cannot, like from an ego standpoint, people cannot handle that, and they're just going to pretend like they did nothing, and that it's not that big of a deal. But the interesting part is like on these videos and articles I was reading, it's just everybody's enraged at the whatever news agency it is, like whether it's Forbes or Wall Street Journal or whatever, just saying like, you did this, like you built him up, and now you're pretending like nothing, it's not a big deal. Like that seems to be general public sentiment, at least from what I can see on online. So it's not like people haven't noticed that.
Yeah, I think yeah, people are noticing that the media has been very easy on the whole situation. But again, I think a lot of people are jumping to the conclusion like, oh, it must be because he donated money and he just bribed everyone because he's if he's committed fraud, then he's not above that, and he's just paying he paid these people off and they're in his pocket now. I think it like maybe there's a little bit of that, and then maybe it's possible, but I think the more likely scenario is, again, like we were just saying, just like it's so much easier to if you had spent months or even years for some of these organizations talking up this guy and this company, and then it all blows up in your face, it's just easier to go with like, oh well, crypto bad. This guy is not.
This is just not out of the line for a typical crypto exchange.
Well, that seems to be like kind of the take, is like, oh well, this is just another day in crypto because crypto bad. Remember, guys, cryptocurrency is bad, and this is the result.
Regulate it.
It's like, yeah, cryptocurrency has its problems, but this, let's be real. That's the problem here. Isn't cryptocurrency? Is that this guy's a shitbag, and it's just an easy like distraction or kind of shifting of blame, right? Rather than blaming the company and the person that you talked up for a year, just blame cryptocurrency in general, and then it's it just eases the hypocrisy on your part, or like the egg on your face to a degree, if you can get people to buy that line of reasoning.
Like, as the economist said, against that line of reasoning, leverage, risky bets, and dodgy collateral should all be familiar from the great financial scandals of old. Like, it's none of what he's done horribly wrong here is specific to crypto.
Yeah, it's nothing new.
Well, I don't think there is anything unreasonable with, like, I guess we can talk about it, but like regulating stuff in the wake of this. It's just like, again, when someone takes advantage of the lack of regulation by doing very unethical and probably illegal stuff, they're still to blame. Like, they should still be front and center and in the spotlight, because there's other companies that have so far managed to make things work despite the unregulated landscape.
Yeah, Binance and Coin Desk, like neither of them are.
Don't say that about Binance.
Yeah, you never know.
The one that appears to be the most sound in America is Coinbase, I guess, because they
not
run
Coindesk,
America based, and they don't do the global aspect that Binance and FTX engaged in order to skirt what few regulations currently exist.
That is true. You never know. Binance might blow itself up.
Well, and Binance has been extremely sketchy in the wake of the FTX collapse with everything that they've done since then. So, I don't know.
How so? I haven't been paying too close attention to that part.
Well, I'm no expert, but my understanding is, like, there was a lot of calls to prove reserves in the wake of of the FTX situation for various companies. And several companies were, I think, Kraken and a couple other. Kraken was the one I recognized, because I don't know all the exchanges, but Kraken was the one I recognized that seemed to have, like, pretty much no issue proving reserves without any suspicious activity or anything like that. And then Binance dragged their feet, and then they were giving excuses why they weren't showing proof of reserve, and then they showed partial proof of reserve, but people were looking at the wallets that had showed proof of reserve, and there was a bunch of very large transactions prior to the reserves being shown that had happened. And
so
then
they're moving money in there potentially just to
and people were like, oh, well, why do you do that? And, like, the Binance response was, like, very vague, and like, oh, well, it's just part of our normal operating procedures that we move, billions of dollars around, which was very
sounds like Sam Bankman-fried excuse when he was moving.
Well, it was very ironic, because literally, like, a week before all of this, CZ had tweeted along the lines of, like, if a cryptocurrency exchange needs to move around money to prove reserves, they don't have the reserves. And then they're moving around money to prove the reserves. So, there's been a lot of questions asked about Binance. I mean, I think the reasonable answer to all of it is just, like, don't keep your money on the exchange. If you have any sort of like life changing amount of money, like, just get a hardware wallet.
Yeah. Not your keys, not your crypto.
That's been the mantra since the beginning, and it's like, if you I just don't understand. If you have $10,000 or $100,000 or whatever, even if to you a meaningful amount of money is $1,000, and that's, like, going to change your life if you lose it, like, go and put it on your own wallet. Like, it's not that hard. Like,
just don't lose the damn password. Because then
the thing to be, like, keep an eye on with Binance is that people have traced the roots of the whole collapse of FTX back to the Terra collapse. And it's like, so that was like a 6-month slow roll or something of crypto shaking until it shook FTX apart. And so, like, Binance might not have problems in the near term, but in 6 months, it might shake out that what happened with FTX was actually the death knell for Binance too.
Yeah, I it's
Maybe
hard to
we'll have
say.
to be doing another one of these. We'll see.
Well, people like, I mean, doing FTX definitely the biggest, but people forget like Celsius
Yeah, there was a bunch of that blew up.
and I think Celsius was like
Three
more
arrows.
impactful for your average person because way more people had like way more retail crypto investors had money in Celsius than in
Yeah,
FTX.
and yeah, exactly. FTX is like the commercial guys.
And
The
so you see
whales is
like,
like, who gives a shit if they lose money? Like,
well, they do.
well, they do, but it's like the regular person. It's like whatever. It's just another hedge fund blowing itself up. Like,
For a
it's
lot of
not
people,
that
there's
big a
always
deal.
been this sort of mantra, though, that like they need institutional investment in crypto to justify it or something like that, and that's going to be painful to those people to think it's not made it until it gets huge institutional investment.
Yeah, I think there is an argument to be made that like for a lot of like the crypto bulls or whatever, like this is way FTX collapsing is way worse than Celsius or whatever because it was institutional investors that got hit, and you already have like again referencing Kevin O'Leary coming out and saying like until this stuff is regulated, no institutional investor will touch it again. It's like in big name investors are out of the space until things get regulated because this was just like a bridge too far and they're
And
just
you're not
not going
going
to deal
to
with it anymore.
100x your Bitcoin if institutional investors aren't involved.
Yeah, that's true.
Feels
Like
bad, man.
unless basically everybody who's just a regular person puts all of their life savings into it. It's just it's not. You need the big money movers, but like if you're just a regular person who's not even in the crypto space at all, it's like watching FTX blow up. It's probably doesn't concern you, but I think just generally from that perspective, I think crypto itself is and distributed ledger technology is extremely important to have as a like a backstop to traditional finance. I think it's a technology that is desperately needed, and if it actually does kind of go under or gets overregulated, it would be pretty tragic to have that happen.
Well, that's what I saw as like a potential worst case scenario of the fallout of FTX is a reduction in basically young people with big ideas coming into the space because it's not seen as a viable space to innovate in
To make a bunch of
because
money.
because the institutional investors aren't going to be involved in it, and then you lose maybe the person who's going to come up with the next great idea for how blockchain could revolutionize something.
Yeah, that's definitely a fair point. Like that would be my main concern coming out of this is like just along the lines of losing the crypto space or having it turn into some god awful government ultra regulated where all of the regulations that they put in, or at least a big chunk of them, are just kind of defeat the purpose of crypto in the first place. So it just becomes like another like almost useless product or useless technology, like in terms of like the finance. Like there's many other things that you can do that probably wouldn't be impacted, but for the actual financial transaction backbone of it, to have it be handicapped either through overregulation or just people completely losing faith in it or whatever else that could come out of FTX, it would be, I think, a huge loss for society.
I don't know if I'd go as far as that, but
No, I think later on in the future it could turn into something pretty great, but
yeah, I just think like if there's like some very amazing utility there, I don't think like institutional investors pulling back for a while is going to be like the death knell. I don't
that's
know.
true.
I could be wrong, but like I think if like yeah, I think there's plenty enough interest still in the space that there'll continue to be people working in it. And if they come up with something compelling, I think things have gone mainstream enough that the investors will come back. But like it'll actually have to be from something compelling to bring them back. Which is that the worst thing? Like so much of the crypto space is just
Horseshit.
shit. Yeah, it's just shit. And it's
it is just full of like schemes and like bullshit and ridiculous delusional dreams.
And I think
the other thing is, the crypto's valuation is still really solid. Like seeing the market value of crypto, its height was 3 trillion, but at the start of 2021 it was 800 billion, and now it's 830 billion.
Yeah, so
it's gone up and down a ton, but it's still there's a lot of money in the space, especially compared to even probably 2019.
Yeah, and I think like we've talked on this podcast already before about like how a zero interest rate environment inflated a bunch of shit and a bunch of money went into stuff that was useless and malinvestment and all that stuff, and that maybe a bit of a downturn and a bit of a cleaning up of things would be useful.
Yeah.
Like I think that's like for the regular economy. I think for the crypto space that like goes times 10. Like everything that you can say about the regular economy, it was just like super exaggerated in the crypto space, whereas like things were way overinflated. Things were like crazy. There was so much scamming and garbage and bullshit. Like I don't think another couple of years of kind of risk off reflection and a little less enthusiasm is a bad thing at all.
And if I can't get a 1,000,000% gain on my shitcoin, why am I even in this space?
Well, exactly. Like those are the main people that are going to clear out of the space, right? Is like the, crypto bro, to the moon gamblers. Like that's who's really going to be like gone out of the space, because it's just boring when it's, sideways for these people, sideways for like 2 weeks is like, oh, the whole thing it's over. Like I can't stand it. Like what, deader than dead market, like whatever. It's over, right? So it's like it doesn't take much to clear those people out, and it's probably for the best.
Mm-hmm.
Yeah, I would agree with that.
We want to go over any more like last points or implications of this whole mess?
Well, I think it would be worth noting that it's probably the FTX debacle is quite likely going to bring in regulation, at least in the United States. Canada's already regulated it pretty heavily. But
one interesting thing, though, was like the American regulations aren't as bad as I thought. I didn't get tons of data on them, but it's like the whole reason FTX wasn't based in America was that regulations there do exist, even if they're slight.
Well, I think the big shoe to drop in the U.S., as far as I understand, is like they're still fighting over like who has jurisdiction on crypto, and that's when like the real amount of the real teeth of the regulations will kick in, because the SEC, if any crypto that is classified as a security will be SEC regulated, and will be under like the same kind of rules as stocks.
Musk will be getting in trouble with the SEC even more.
Yes, and then
go to the moon.
There's one other. I'm going to see if I can get this acronym. It's the CFTC in the U.S., Commodity Futures Trading Commission, and they argue that at least the big ones, Bitcoin and Ethereum, should be treated as commodities. And then if that was the case, it would go under the CFTC, and they would be regulated as commodities, which, so that it's basically a jurisdictional.
Then we could actually have our digital gold. So I respect that.
I think it seems like the likely scenario is like Bitcoin and maybe Ethereum would be put as commodities, and then everything else will be securities.
Mm-hmm.
That's like seems
That
to be
makes
like the
sense.
direction things are heading in. Just
Because I'm sure the commodities don't even want to deal with shit coins. So like those can't be what they're aiming for. They want the Bitcoin authority.
yeah, it just seems to make sense in terms of like people don't treat shit coins as like they're just hoping for them to moon, right? Like they're not treating them as like currency or anything. They're just treating them as like investments essentially, but or speculations, right? So it'd make more sense to put them under security laws. But yes, Dogecoin would be SEC, and then Musk would be getting.
Certain somebody who owns Twitter might be pumping Dogecoin, and that might go against the SEC's regulations.
Yes, exactly. So Musk might have to go to war again.
It's gonna have PTSD in no time.
SEC, you mean?
The great SEC wars of the 21st century.
One of the things that I don't think we really mentioned is just like potential corruption within the whole affair. Just as like a quick note that will be interesting to follow. There was an alleged leaked email that from the SEC that they were considering giving a it's called, let me find the term here. God damn it. Basically, the email was stating that they were thinking of giving FTX a bit of a pass on all of this. And it turns out that Caroline Ellison, the Alameda Research CEO, her father and the SEC head used to work together at MIT. And Ellison's father, I think it is not Gary, it is Glenn. Glenn Ellison was Gary Gensler, the SEC head. Elliot was Gensler's boss at MIT, and they're apparently still buddies. And Gary Gensler had a call with Sam earlier in 2022 to talk about crypto exchanges. And according to insiders within the SEC, like that's not normal procedure. And so people are rather concerned about that. And there are now rumors swirling that there is some potential corruption there. And so it will be very interesting to see where that is all headed, because apparently Gensler is going to get grilled over this.
Make old boys clubs great again.
Yeah, basically.
That's like the nerdiest, lamest old boys club, the MIT crew.
Yeah. But I mean, you gotta modernize with the times.
Yeah,
just don't even have legacy students. Club. Just gross.
Like that old boys club is definitely not going out to the club and getting cocaine and hookers. That crew is like hanging out and playing.
If you're gonna be a part of old boys club, at least you gotta have fun with it.
Doing trivia and talking about stats.
Watching Jeopardy.
Exactly.
Falling asleep at 8:30. They'll pass out on their leather chairs. Yeah.
Oh, I've had 2 beers. I gotta go home, buddy. Like I'm gonna be wrecked
I need someone to drive me home. 2 beers deep.
Someone call me an Uber.
I can't figure out the app myself. Yeah, I just wanted to mention that because, like if that is the case, that they have, like the email turns out to be correct and it was because of that connection, that'll be like, that shows, if that turns out to be a proper bit of corruption, that is the head of the SEC involved. So I think that will be well worth following, and hopefully some actual proper investigations are done into that.
Well, just to add on to that, I think there's a couple of threads worth following of, like, because yeah, there's so much information lacking at this
Yeah.
point, and maybe forever lacking, just because the records and messages were so sparse and intentionally terrible. But again, like the amount of political donations that were made, I think that's worth like following up on. Like which politicians were like getting
Well,
money and how much,
apparently
and like
Sam donated directly to Biden himself, like the Biden campaign, and he was hanging around with, like super big shots like Bill Clinton. He's partnered with WEF. It's like his connections and the donations, I'm sure, are legitimate. Like they're high level and serious.
yeah, and so I think if following through on that and just like seeing where that goes, and also his connection in the media too, right? Like, I mean, for God's sakes, he's doing another interview in the next few days with New York Times, and it's like, I don't know, it's just strange. It'd be like Bernie Madoff doing an interview like a few weeks after his fraud was revealed.
We got to tell both sides of the story.
Yeah, it's kind of, I don't know. I mean, it's just a weird look. It's like, I guess we'll see how it goes, but that's another thing just follows. Like, why is this? Yeah, keep checking in on why the coverage has been so, comparatively positive over this situation in the media, and see if it changes, because I think that'll be interesting to follow along with.
Mm-hmm. There definitely are some very big questions around the money and the connections, and there's some. I would say there's some pretty big implications from them, depending on what is, substantiated and what isn't, and you know, there is a potential for this to really blow up into something bigger. Whether it's likely, I don't know, but there are the signs of that, right? Like there are at least some initial little kernels that could indicate like a very interesting story, like beyond what is already there. So yeah, it'll be well worth following up. Anything else, you guys?
That's all for me.
Yeah, I think covers it for now.
Alrighty. Thanks for listening. Peace.
Peace.
Peace.